the idea of issuing a token and then hyping that token up, dumping that token on retail, uh, whether or not you've actually built something that lasts more than a few years. If you do traditional venture capital and you either start a business or you finance in an early business, that's like a multi-year, that's a very long-term project. The average life to go public is like 8 years or more. The crypto industry kind of is about short time preference and kind of just getting to the profit part before they built something and dumping that on retail in a way that is without proper disclosures.
The FTX collapse has rewoken the Bitcoin, not crypto discussion in full force. Top investors from both sides of the aisle have tabled their arguments for their favorite crypto assets. Bitcoin maximalists like Michael Saylor and Max Keiser continue to maintain that all other crypto assets are unregulated securities with almost as much risk of failure as FTX. On the other side of the argument, we have founders and top investors of altcoins. Some, like Cardano's Charles Hoskinson, also speak favorably about Bitcoin, but not at the expense of their own projects or favorite cryptocurrency assets. In a recent Swan Bitcoin interview, popular macro analyst and Bitcoin Lyn Alden joins the conversation. She speaks about the risks associated with other cryptocurrencies but not Bitcoin, which she believes is not just a crypto asset, but the only suitable way to bring uncensored, lightning-quick financial services to the 8 billion inhabitants of the planet. Regarding other crypto assets, Alden shares similar views with Saylor and Keiser. She explains that the cryptocurrency industry is filled with untested and poorly formulated projects dumped on retail investors for profit. She adds that Bitcoin is the only way to avoid these crypto casinos that can fail at any time like a pack of cards. But Bitcoin, according to Alden, is much more than just a better crypto asset. It is the only guarantee against government overreach and undue censorship. We will now take you to Lyn Alden's interview as she discusses the clear differences between Bitcoin and other crypto assets. Please watch, share, and like this video. Also, ensure you drop your comments and observations in the comments section below, subscribe to the channel, and turn on post notifications for more videos like this. Everything helps with the YouTube algorithm and contributes immensely to the channel's growth. Thanks and enjoy the video.
There's utility and then there's speculation, right? So when Satoshi published this white paper, he had a clear goal in mind based on all the writings he did, which is essentially that the world has a payments and a savings problem, right? So currencies can be diluted. There's 180 currencies in the world. I think it's something like 130 of them are like free floating. They all have these little local monopolies. Most of them are not saleable outside of their jurisdiction. Only a handful are, like the dollar and a few others. Most of them degrade extremely quickly in terms of purchasing power, sometimes with these huge stepwise devaluations like hyperinflation or nearly so. And so if you're just born into a jurisdiction that for whatever reason has a bad money, it's very hard to save. So that's number one. And then number two, there's all sorts of financial censorship. As is more and more technology developed, it's easier for authoritarian governments to censor payments and to infringe on privacy and to control things. I actually tweeted out two things recently. One is that Nigeria is limiting how much cash you can withdraw from ATMs significantly in order to push digital payments. And two, there was a story about Iran potentially freezing bank accounts of women that don't wear a head covering, right? And so uh, these are examples, and obviously China has been a long-term example of linking a social credit score to payments, where if you're on the wrong side of the CCP, you might not be able to get a train ticket, for example. You're just cut off from all sorts of services. And so Satoshi, science fiction's been looking at this for a while in general. The field's been exploring it, and Satoshi was ahead of it, and he provided a technology that can solve this. And I think the innovation is he took proof of work, combined it with difficulty adjustments, and purposely kept the node small and simple so that people can run it. And naturally things develop in ways you didn't expect. I mean, I don't know if he expected miners to break away from nodes. There's obviously iterations that happen over time because it's not led by Satoshi anymore. But essentially, the network is fundamentally the way it looked when it was launched, which is about as decentralized as you can get, and it purposely makes a lot of sacrifices in order to maintain that decentralization. And like any other financial system, you can build up in layers. You can add you can add side chains, you can add channel-based things, you can add some custodians on top of it. There's all sorts of ways to build up a stack and increase throughput or increase code expressivity, all sorts of things so that people can kind of choose what layer the network works for them and their goals and their resources. And I think that's the real innovation. And I think the vast majority of what happens elsewhere is distraction, malinvestment, consumerism, basically fiat in a digital form. So, and I made some exceptions. I mean, I think stable coins are obviously serving a utility purpose in many parts of the world where they need dollars but have trouble accessing dollars. So I've been open to that. I think there's opportunities for tokenizing things, basically just better tech rails, better settlement rails, things like that. They don't necessarily need like a floating token, especially one that can be completely decoupled from the fundamental business underlying it. And so I think that the way I've described it is that the same technology that allows for peer-to-peer money has allowed for peer-to-peer scams, right? So you can transfer value between each other, but it also has allowed scammers, and they're not unique to this industry. I mean, there's scammers throughout history, but this is just a new medium, a new tech rails where people can create something, market to the public, hype it up, and then get out of their position without ever actually having built something sustainable, something enduring. And that's just a recurring thing that happens cycle after cycle. And so I think it's natural to see a divergence in the space and for people to say, I'm focusing on utility. I want to solve real world problems around the world, especially problems outside of the developed world, but really the whole world. And there are tools like Bitcoin and stable coins and things like that that are useful. And then there's this whole offshore casino, regulatory arbitrage thing that's happening on the side, and essentially saying that whatever's going on there, that's a different industry. That's a very different thing, and that this is now not really something that has almost anything to do with Bitcoin. And a lot of times, even those companies will rarely talk about Bitcoin. I mean, I think what was the stat? Like Coinbase went like months and months and months without mentioning the word Bitcoin in a tweet.
Hmm.
A lot of their executives have .eth in their Twitter handles. Basically, the industry has forked in some sense. There's obviously a Venn diagram. A lot of people own both, but there are pretty committed people that I think focus on Bitcoin and say, a lot of what's happening elsewhere is a distraction.
As the first asset in the space, Bitcoin will retain its crown, at least for the foreseeable future. Even regulators in and out of the United States are learning the difference between the leading crypto asset and other cryptocurrencies. But there is no denying that a lot of great blockchain related work is happening outside the Bitcoin network. In her interview, Alden explains that there are lots of brilliant professionals using other blockchain networks to solve important problems we face in our society. These people and projects are not the problem, Alden adds. According to the renowned macro analyst, the problem is thousands of untested and questionable crypto projects being dumped on retail investors daily. Let's get back to Lyn Alden's interview as she also discusses the possibility of another project eventually overtaking Bitcoin.
Final point I'll make is that there's obviously smart people working in the other side of the field too. There are people working on challenging cryptographic problems, challenging computer science problems, and no one blames them for that. It's really the question of undue seniorage, the idea of issuing a token and then hyping that token up, dumping that token on retail, uh, whether or not you've actually built something that lasts more than a few years. If you do traditional venture capital and you either start a business or you finance in an early business, that's like a multi-year, that's a very long-term project. The average life to go public is like 8 years or more, if you even make it that far. If you don't, you can also get acquired, right? So a serious business with serious people actually analyzes your business and decides to buy it. And so those are ways for founders of interesting things to eventually get exit liquidity from what they built. Um, Whereas the crypto industry kind of is about short time preference and kind of just getting to the profit part before they built something and dumping that on retail in a way that is without proper disclosures, just kind of getting it out there and then profiting from it, going on to the next hype cycle, well, what you built is just not actually a business. It's not actually something sustainable. It doesn't stick around for more than one cycle. And I think that's the problem to focus on. It's not the technology itself. It's just the financial misincentives that happen throughout the whole space. I think that anything you can do for the network is good. I mean, I think especially the points where Bitcoin is currently not the strongest, like privacy fungibility. I think any work there is very good for the network. I think educating and separating the difference between Bitcoin, a lot of these coins are going to be created out of thin air, is very important. So I think anything that you can do to have the media not lump those together is important. I think having people understand how Bitcoin uses energy and how much it uses
Yes.
relative to total energy produced, how it specifically, just financially seeks out wasted energy. as a matter of just just economics. I think all of those are very helpful. And one thing the way Cory describes it is that Bitcoin is inevitable, and but obviously there's like a hard way or an easy way to get there. I generally phrase it a little bit differently, but kind of a similar way of thinking, which is essentially that I prefer not to think of anything as inevitable because I think that can lead to complacency. And instead, it's like, okay, it's just this profoundly good technology, this profoundly important network, and let's not mess it up. Let's put it to the best possible use, decouple it from casinos and just short time preference behavior, and focus on what really matters, which is payments and savings and things like that for 8 billion people in the world.
On what side of the argument do you belong? Are you a Bitcoin maximalist, completely dedicated to altcoins, or do you freely invest in Bitcoin and other crypto assets? Please add your voice to the conversation by dropping your comments and observations in the comments section below. Also, ensure you like this video and subscribe to the channel for more videos like this. Thanks for watching.